Hi friends, this is Chris.
Yeji.
Welcome back to the channel. So we're talking markets and drinking some coffee. And I wanted to share some thoughts with you guys because there's a fascinating paper that came out. I want to tell Yeji as well. It's about how markets are broken, and it's written by a guy from my school named Cliff Athnes. He runs a fund, and he's basically like, "Yo, I've been in this market 34 years, and like right now things just be too crazy."
Why?
You know, a lot of it's social media, these kind of things. That's one
Yeah.
of the big ones. But I'm going to tell you some other things about this stuff. And if you guys have been watching, during that pandemic stuff, you'll understand that like too many people tweet out too many things. Like, Mr. Elon's like, yo, get Dogecoin, that kind of stuff. So let's talk about this. Like, what does it mean to be broken in his point of view?
What is healthy market?
So a healthy market, you would argue, is markets or stocks tend to trade based on what they're worth. Word.
Actually, they
Word.
work.
So let me guys give you an idea. So there's a really fascinating concept, book value. Okay. The basic idea is like, okay, let's say you own a company and you're going to sell off all the pieces of the company. Companies have a certain value of assets, right? They're going to owe some money, right? So you'll subtract that. But like, let's say, for example, you sell off Apple, they're going to have the equipment, the building, all that stuff. So it's going to be worth something. So one way to value a company is what kind of assets do they have, right? Another way, that's one way I think about it. Another way to think about how you value a company is how much money does a company make, right? So this is all numbers based, right? So another way to think about how you value stocks is everyone on Facebook wants to buy it. So it's not really connected to any kind of value per se.
It's kind of auction.
It is like an auction, right? Another word you could use is Ponzi. So you can, and for people who've been in the market a long time, they're like it's kind of weird for them because they're used to using numbers, realistic numbers to be, valuing a company. There are many reasons why we're in the world we are today. One of the reasons is low interest rates. Another way to think about it is it's just easy to borrow money,
Yeah.
right? So everyone has a bunch of money, and if everyone has a bunch of money and have access to a bunch of money and to borrow money at 0% or whatever, you're a fool. Well, not fool, the right word, but you can make a lot of money in the market because money's so plentiful that everyone's throwing their money into the market. It's kind of like a snowball on the way. So it's like that's where the party is. So that's where we should go. Another thing that's going on with the markets also, which is really interesting. So he was saying that someone like him or someone like Mr. Buffett, Warren Buffett, would tend to be looking for value stocks, meaning you buy stocks based on their fair value. And then there's a gap though. So there's people who buy these value stocks, and there's people who say buy your kind of bubbly growth stocks. And you call this like gap between them, between the growth of the bubble and the value stocks, meaning based on real numbers, is like a value gap. So you're always looking for kind of like, stocks that maybe other people are ignoring, right? The stuff like that. The problem is that if money's so cheap for so long and the stocks of the bubble, all they do is go up and up and up and up, it makes you feel like a fool and no one wants to invest with you anymore. Does this make sense?
Yeah, but it create like inflation? It affects inflation too if money is cheap.
Right. Well, but see, with inflation though, you still want to be investing in the market because we have more money, stocks will go up.
Yeah, but
Everything goes up. Yeah, everything goes up, and that's essentially what a fund manager is all about. Is like, where do you put your money to where you think it's going to go up the most? And then that gets back to, well, if the bubble stocks are going up and everyone's still buying it, then therefore I should buy it too. It becomes so and remember this conversation where if you want to talk about just numbers, hey, this is the book value of a company. Like if I sell the building, this is what I can sell it for. If I sell all the computers in the building, this is what I can sell it for, right? Like there is a real value to a company that's not necessarily stock value. So because stock value can be disconnected from the real world. So for value investors, it can be really frustrating. The other thing too that you talked about, which is fascinating, is that the market is filled with, say, two types of investors. So one would be the shark.
What is shark?
Shark, like shark
Yeah, I know.
in the ocean.
So
shark would be the smart money.
I see.
like a hedge fund,
I
Wall
see.
Street, et cetera. But the big shark.
I see.
And then the opposite of the shark, you could say minnow or little fish, small fish.
We say came ant.
Oh, okay, yeah, you have the same concept.
Yeah, we have yeah, we called ant.
Would it be ant? What's the big one? Big ant or
Really say we said came 투자자, the came ant investor.
ant investor? Yeah. So what's interesting about this is that you have these two, and this sort of like has a divide in the market, right? And so one of the things that the sharks, they make money by taking advantage of the small fish.
And yeah. Yeah.
Oh, the same thing. Yeah. So
They released the kind of wrong like rumor.
Yeah, yeah.
And the ants moving like fast, but it was wrong.
yeah, so that's a real thing. That's a
Yeah.
real thing. So you could call that market manipulation, however you want to call it. And what happens, which is really fascinating, is if there's too many sharks, the sharks can't really make
That's
that
not
much money.
Yeah, that's
Like,
not shark anymore. That's like the middle fish.
Middle fish, middle fish.
Become middle
because
fish.
everyone's a shark, right? And also it's something that they would prefer if there's less sharks and a whole bunch of minnows, right? Now here's the thing that's kind of different though. So that was in the past. So sharks would make
Yeah.
money because there's lots of minnows. But these days, the minnow or the small fish or the ant
Small fish.
can organize on social media, right? So something that we've talked about for several times
They
in the
made a
channel.
lie.
Yeah, the little ants, because then you're talking about, okay, remember, is the stock market a big Ponzi scheme,
Yeah.
or are there actual values to stock, right? Depends how you want to view this kind of thing. So then, for what some people do, what also changes the way the market works, is there's like, you know what? I don't want to play this game. I don't want to play the Ponzi game. I don't want to play the number value game because there is no value since we're all basically a Ponzi anyway. I'm just going to buy index funds. So basically ETFs that track the whole market, right? It's S&P 500.
S&P,
Yeah. And so we talk about this several times in the channel. I always say, guys, if you don't want to mess with like worrying about what Jerome Powell says or which hot company to buy, you just get an index fund because you're not really going to lose. You have the whole market, right? So the problem with this, and this is where partial also why it kind of breaks the market, is that if everyone goes into that, then there isn't really a market anymore.
Yeah.
because how you make money in the market, according to like someone like say a hedge fund manager or whatever, is you find a stock that is undervalued, that the market currently has priced wrong, right? So for example, let's say company A makes coffee and they're selling like lots and lots of coffee, but for whatever reason, Wall Street hasn't noticed that they're just selling lots and lots of coffee. Or you hear a rumor that they're going to come out with a new, coffee product that everyone's going to get, and whatever reason, you think that the company is undervalued, right? So you can get it at a cheap price, is what we're saying here. And so you're looking for opportunity in the market. If everyone puts all of their money in just the total market fund,
You never have a chance, give the chance to the little business to grow.
well, that's part of it, right? The other part you think about is like the way the like the total market funds work is that you wouldn't necessarily have companies out there that are completely undervalued, right? Because it's kind of already decided for you, and you couldn't do the fake rumor thing anymore because no one's picking individual companies. The minnows couldn't come up with whatever reason. So for example, people like the big value investor or fund manager would complain is like, why are all these retail or minnows or ants buying a company that's bankrupt just to basically push it up, right? Like a short squeezy kind of thing, right? So, from the professional money manager's perspective, they feel like they're getting pushed out of the market in a way. But the retail investor also feels like they're getting pushed out because why bother take the risk? The sharks are going to come eat me, right? Or I can join a mob or a gangster of little investors.
Party.
Yeah, join the party of little investors, but ultimately that kind of falls off. So then they join into the total market funds. You guys see what I'm saying? So there's these things that are kind of moving in that direction. The other thing too, which is really fascinating, is he was talking about how during the dot-com bubble, so it was back in 2000, the value gap, so the gap between the bubble assets and then the value assets, right, was quite large, right? Largest in history kind of thing. Then we get to the pandemic, basically, and everyone's at home with the phones and the Robinhood, and suddenly we get to that thing again, right? And that hasn't quite completely popped yet.
Yeah.
We still have these crazy bubble stocks, right? And we have crypto, this kind of stuff. So how long can this thing possibly go, right? That's the question. Make sense so far?
Yeah.
That we're talking about? Yeah, because we're talking about like gaps in the market, where there's opportunity, and sort of why things are the way they are. The other thing too regarding social media, and actually Warren Buffett comments as well, and lots of people do, but basically these days we all have a phone, we have our apps on the phone, and the market kind of feels like a casino. So basically you have,
It's gambling.
yeah, it's basically gambling. To her bank, it's basically gambling. So you have a casino in your pocket at all times. And there was a really fascinating analogy that he used is like, okay, so if I go to a regular casino and I play, blackjack or poker or whatever, chances are I'm going to lose all my money at the casino. Because in casino, do you know what we always say about the house?
House always wins.
Yeah. I think, do you guys say the same in Korea? House always wins?
Probably.
Oh, you don't know so that or casino?
Yeah, because I don't really go casino.
Yeah, good thing too. And I don't like casino. We actually tried to do. We didn't gamble. It was like a play gamble kind of thing.
Yeah.
So I wanted to with play money, But I wanted Yeji to see like how quickly the money goes.
So, but we have a saying that beginner always win.
Oh, beginner's luck kind of thing.
Yeah, beginner's luck.
Yeah, that's the worst thing.
Yeah, so I got money actually. Maybe try. I won a couple
Yeah.
of times.
They want to get you hooked, right?
Yeah.
And that goes back to these apps on your phone. The casinos is they put a lot of bells and confetti. No, I don't know if they do this in Korea on your apps. I'm not sure. So on the American apps like a Robinhood or something like that, they were the first app to make it when you buy a stock. It shows it's like a video game. It plays sound and confetti.
I don't.
And so we've talked about if we should make that illegal. It's too much like game, like it literally is.
I
right?
only use just big company stock app, not the Robinhood. So I don't know those
Yeah.
that exist in Korea.
Yeah, so in USA, if you use like a major bank or a major broker or whatever,
yeah,
there's none of that confetti. That's Robinhood was the first to do that, and I don't know, guys, because I don't know. If you say you use the gambling app like a DraftKings or a FanDuel, if they have like a confetti, confetti like or fireworks or smiling kitty or whatever, right? They try to make it like game. And so right as we're talking about like, gambling's addictive. So think of it this way: if I know I'm going to lose all my money at the casino, in Vegas,
Yeah.
I'm not going to go anymore, right? Because I know I'm going to lose, right? It's fun, but I know I'm going to lose all my money.
Yeah, now you saying that, I'm thinking about when we go to,
What?
been to Vegas, we didn't play at all, right?
No, you don't want to get
Not
started.
even coin.
And then
I don't mind doing the stock because I feel like I'm gonna make money.
okay, so that's the difference. So think of it this way: the reason why the markets are the way they are today is because the app can be really addictive, and you feel like you're always going to win,
Yeah.
right? So with a casino, it's addictive,
But casino is actually gambling, but I'm actually buying the like Samsung stock, LG stock, but it doesn't feel like gambling.
but that's the thing though. You're buying, or hopefully we are, buying Samsung Hynix, that kind of stuff, right?
But of course, I had an experience of buying a like paper company, those kind of stock, which is going to bankrupt. I do have experience.
Because you can make money on them.
Yeah,
That's
so
true. It goes like
Yeah, back then I was stupid that I just heard my friend just kind of rumor. Oh,
Right.
this company is gonna do something. Oh, really? I didn't search at all.
Right,
so I just
right.
push it and buy it.
That's what people do, and it's the same with crypto. Like, no one knows what any of these cryptos do. They pretend they do online, but there's like too many of these dang things to even know. A lot of these cryptos you don't even know like who started it, that kind of stuff. So basically though, what we're saying is that with casino you quit going because you know you're going to lose, but with a casino in your pocket and things only go up, say during the pandemic or whatever, then of course you're going to get addicted because it's fun and you're making money.
Yeah, it's always going up.
Right. And so this has really changed the markets that you can do it 24/7. You have information everywhere. And so then the question becomes is like, will we ever get away from this kind of world? Because in this world,
I think this is new world. We are not gonna go back. That's my opinion.
well,
But these days,
what's that?
like even the parents teaching elementary school students how to do the stock. I give you a week, 용돈, we say money,
Right.
and you can do yourself, and like investing age is getting younger, I think.
I wouldn't disagree. That's probably true. That young people are more interested in money. It's a casino in your pocket, etc. We shouldn't refer to casino, but that's how a lot of people think. And so the question right now that we're facing is, are more and more people going to just do your basic and pretty frank boring index investing, right? And that would essentially weaken the casino, would weaken the sharks. But if we all go into that, then it's not really a market anymore the way that we perceive it today, because in that world with all index funds, no one's really picking stocks individually,
Yeah.
right? And so then it's very hard to like say, hey everyone, I'm pumping up doggy company, paper company, and so then we all pile into it. From the value perspective, a professional Wall Street manager, they would actually prefer us not to do index funds
Yeah.
because they don't have a job anymore, right?
Yeah.
The other problem is, which he doesn't mention in the paper, that's why I said just wanted to, that was sort of starting point. If we move into AI investing, where the AI determines everything, that kind of makes it very similar where you just there is still a market, but it's very much less so. Because you want to think about it this way, and this is also something that's part of understanding our markets. Remember when I mentioned the value gap? So a stock tends to be undervalued if it's not popular. Does that make sense? Because
Yeah.
like popular stock,
It's
everyone's
already popular.
everyone's buying the
Yeah.
same thing. It's in a way the market's like a Ponzi scheme. You're all buying the same thing, and the only way for it to go up, you bring in new money, etc. If we all just do index funds, there's not really a difference so much in popularity. Literally, we're all buying the same thing. Or if we all do the AI, and let's say the AI is all programmed the same way, the AI is going to end up buying the same thing theoretically. Now, what's interesting about Cliff is that he got his start. He went to Penn and he majored in it was like computer science and finance, and so he was one of the early people who programmed the algorithms and stuff like that, like how to basically trade with computers, essentially, right? We're at a much different point today with trading with computers than we were back then, because the computers can like balance things really well. Computers can read headlines, which is kind of crazy too. So like, if you ever watch the markets, like really closely watch the markets, and basically listen to Squawk Box or tickers, that kind of stuff, you can actually hear the news come down like live, and you can literally see the mark jump like that, because no human
Can react
no,
fast.
not really. The other one thing you could do though, and this would be sort of how Wall Street works on the inside, is like if you know there's news going to be coming out, you would pre-program your trades to come out, literally the same time or 1 minute after, or well, really 1 second after.
1 second, 5 seconds.
You don't want to get caught for insider trading. So, but these are the kind of conversations that's fascinating that they're having among, big funds about how sort of the world that we're in right now, and sort of which direction people should go. Guys, I always say, the index fund investing is a pretty safe way to go, and essentially, you're not really going to lose per se, because yes, if the whole markets go down and everything crashes, yes, we all lose. But when you do that, you're capturing the kind of performance of the whole market. The funny thing though is that if you buy the average, you're always going to be
average.
Yeah. So you can't really underperform or
that's not really invest per se. If you're just playing average.
Well, I mean, it is in the sense of because okay, I know what you mean.
Yeah.
So the concept of investing, though, is I'm giving someone else money. They're going to use my money.
Yeah, money is working for making money.
Yeah. So that's basic idea, right? Investing in a company or in another person to make money for me. And I don't have to do anything. The one thing I would say, guys, is that with today's information that we have, etc., you definitely can be. You definitely can be more informed than previous generations, but you can also be more misinformed. You're right, getting wrong info. And so this is something that we do every day on the channel, is just try to go through the news and try to figure out, okay, what's real, what's not real. Because one of the most important lessons that you'll learn in the market, also learn in life, is if you have a winning strategy for anything, right, be the market or your life, you have to stick with it as long as you can. Sometimes your winning strategy, other people may not like it, or they're like, why do you do that winning strategy or whatever. But they could be crazy for all you know, right? And that's the hard thing to do when say, if say we could say value investing or winning investing, everyone want to say it. And again, this is not just markets, it's also life, is because you always see like the crazy crypto dog coin, or you'll see someone, oh, I'm moving to this, bubble city, because cities can be bubbles too, right? Because I'll give you an example, Miami's a bubble right now. It's too expensive there. Everyone thought there's going to be lots of hot markets, and suddenly everybody goes there, and then there's nothing there anymore because too many people are competing for the same stuff. But if you always get caught trying to chase people, chase the trend, chase the bubble, you're going to get burned really badly, right? So that's what I was saying. You want to pick a winning strategy, stick with it, and it's hard to because
And you have
what's
to
that?
be careful that, if you have a winning strategy, super winning strategy, they're not gonna share their
Yeah,
strategy.
yeah,
So you gotta careful that, oh, I have a winning
yeah, yeah,
strategy.
yeah,
You
yeah.
just pay, little bit of money. I can share with you, but it's not gonna have, it's not
Yeah.
like that.
So anyone on YouTube that says, for $20 a month, or like I won't say the person's name, we'll just say like scam people on YouTube that will say, buy my $500 course or
Yeah,
$2,000
I'll
course.
share my winning strategy. No.
No, the scam is that they're making money from selling you courses. They're not really winning at life,
Yeah.
or winning. And I want to mention the life thing too, because I'm not going to mention names, but there is a YouTuber that used to be popular, right? And it's funny that because it happens to a lot of YouTube channels in this space, they disappear and you don't hear from them for like years or whatever. And I was kind of curious. I'm just like always curious what happens to these people, because I saw something on social media of this person, and it didn't look like the same person anymore. And in fact, I told Yeji, I think, they're on drugs or steroids, actually, was what it
Yeah.
was. And then it turns out they just made a video that yes, they are. And basically is their low self-esteem, they said, is really depressed all the time. And I don't want to make fun of the person too much, but the point I'm trying to say is that, like, if you chase the trends, is what this person did, right? And then after that trend, he
That.
yeah, it didn't really have anything to go on after that.
Yeah.
It wasn't really a solid foundation. So that's where, for example, say with investing, I understand that the value investing in a company that where I know it has a value because they have assets, they have a building, they have all this equipment, they have, trademarks, patents, whatever. It's worth something. So if you at least have a baseline in reality, you're not going to lose. And it's hard to keep that when everyone seems to be like like right now, everyone's riding the AI trend or whatever. And so because I make videos, this, when I tell people, because of the young kids, they're used to seeing, all the
Yeah.
AI stuff go up and up and up and up.
And now it's Mars. It's trend, I guess.
Yeah, right. Elon said he's going to Mars, and I guess we're all buying Mars stocks to go up and up and up and up and up. And you feel like you're missing out, right? So, if you want to chase safe things, I always say this too, is that, like, just make it a smaller portion of your portfolio. We're in a culture now where it's YOLO, put all your money all in one thing, et cetera, and it's not really great to do. But what we have to do though on this channel and this is sort of the lesson is, you identify like winning strategy and then try to figure out what is real and not real, because there's a lot of people out there that basically are snake oil salesmen or whatever, right?
You Google yourself at least a little bit before you invest it.
Yeah, don't depend on some random, person on the internet that just says, "Oh, this is the hottest thing since spilled bread." Unfortunately, in this market that we are today, some people are paid to sell stocks.
Yeah.
Yeah, it's a real
It's
problem.
real.
It's a real problem, and I've seen the contracts, and I've been offered to do certain things,
Yeah,
and
then-
I say no. I mean,
Yeah.
you don't get involved with this
Yeah,
stuff.
then after that they're disappear.
Yeah, like the person that will disappear in a couple different ways. So, you don't want to find out about that stuff. So anyway, hopefully this conversation is interesting and helpful and useful for you. We'll continue these conversations and have some more coffee and market talk. This is actually pretty good. And we'll catch you all in the next video. So goodbye.
Bye.